Should you buy silver or gold? So if you guys haven't watched this video that I did last week, $125 to $714 silver, where we compared the 1970s silver bull market and translated it to today and what that might mean, I'll put a link in the description below. And the Reserve Bank of India has added 0.9 tons of gold to its reserves so far in March. To week ending 11th of March, this takes its total gold reserves to 758.9 tons. And the Central Bank of Ireland added a further 1.2 tons of gold to its reserves in February. Its gold reserves now total 11.3 tons, according to the latest IMF data. Should you buy silver or gold? What's the better investment right now? And will we see $30,000 gold? Well, to answer the first part of the question, let's just cut to a clip with Luke Groman and see what he has to say.
From Charles, do you think it would be better to hold more gold than silver in the months and years ahead? How do you see the price of silver reacting to the scenario you laid out on Grant Williams' podcast last week? I've always held more gold than silver. I actually sold most of my silver back in April of 2011 with above $40, which was one of the best sales of my careers, actually. Better lucky than good sometimes. But to answer your question, in my opinion, yes, I do think it would be better to hold more gold than silver. And the reasoning here is pretty intuitive, but I think once you're here to be straightforward. Number one, gold is on central bank balance sheets, silver's not. And you can revalue gold higher. Gold can be allowed to move much higher to be big enough to be used as a neutral settlement asset, because for the very reason that it's not used for anything. Silver has the drawback actually of being used for something in this case. So I'll use a much more extreme example just to make my point. Let's say instead of gold that central banks decided to create a wheat dollar, right? Or a wheat as your neutral reserve asset, right? So we're gonna bid up the price of wheat to basically recollateralize the system, offset the debt on a net basis, be big enough to settle global trade in wheat. Okay, the price of wheat that we would have to see for wheat to be big enough to serve as a global neutral reserve asset would be so high that billions of people across the emerging markets would starve to death. And so you can see very quickly with this extreme example why using a neutral asset, a commodity that is used for something, is a really bad idea for a reserve asset. So silver, half of it's monetary, roughly half of it's productive use. It's an industrial good. If you used silver and if you bid the price of silver up as much as you needed to be big enough to settle global trade in silver, you would be pricing a lot of silver applications, industrial applications, right out of the market. You'd be making solar panels too expensive. You'd be making all the different applications way too expensive. And so that's kind of counterproductive to what a lot of policies we were trying to move toward. And so now, do I think silver will move higher in the scenario that Grant and I talked about? Yes, absolutely. I think it is going to participate in with inflation and probably at a premium given its criticality in a number of different important industrial and green energy applications. However, I think there's been over the last 10, 20 years, this growth in the gold to silver ratio, it moves around. But ultimately, I think on a secular basis, the gold to silver ratio will probably keep moving higher because, like I said, secularly, I don't know about in the short run, but secularly, because gold's not used for anything. The fact that, if gold is made big enough to be the neutral reserve asset, unlike wheat, unlike silver, nobody's going to starve. No industrial applications are really going to get shut down because gold isn't used for anything. So I think that's why, for me, in the current scenario, in the scenario that Grant and I talked about, I think for me, I would rather hold gold than silver. I think you want to own both, but I hold more gold than silver for that reason.
Now, Luke does make a few good points that central banks have gold on their balance sheet, not silver. he does make a good point that the secular trend with the gold-silver ratio has been getting higher and higher and higher, even though we know that the mining ratio is around 8 to 1. And there's a lot of manipulation in the silver market in particular. He does make a good point that silver is used, a lot of silver is used in an industrial capacity. Now, those of you who haven't watched this video, I did When Will Silver Hit $100? And Keith Neumeier has talked about the mining ratio being around 8 to 1. And how that basically as an industry, the silver miners need to come together like OPEC did, because regulators aren't gonna solve the problem. And the paper market, look, you know what? Check out this video. What I might do now, in this video, I also share what I'm doing in helping Keith Neumeier achieve this. But what I'll do now is I'll cut to a short little clip from this video about what Keith Neumeier argues what we need to do so that we can see silver hit $100.
For markets, because unfortunately, as a mining sector, we have to rely on the paper market for pricing our commodity.
Right.
If somehow we can get away from the paper market and price our market based on actual supply and demand, where we can actually deal with the end user directly, whether it's a Sony or Panasonic or a Tesla or BMW, you name the consumer. I think that's where we need to go, and that's where we get proper pricing, and that's what I'm pushing.
And we have touched on this before, that there isn't enough physical silver to back up the paper silver out there, that the futures markets may distort things.
Yeah.
So how does that get fixed?
By the mining sector standing up and saying we've had enough. When the silver market trades approximately 1 billion ounces a day in the paper market, and the miners produce 800 million ounces in a year. So the leverage is astronomical. So as long as the regulators stand by and do nothing about that, and I don't expect they ever will, because generally speaking, the banks are pretty powerful out there. Who's going to who's going to stand up to that? It's got to be the miners. The miners have to get together, like OPEC, like the diamond industry, like the uranium industry. Why does silver and gold have to be treated differently as other commodities?
So is that something you would potentially do? Lead some kind of silver consortium to fight against this?
I've been vocal about it a number of times, and I'm on record today on Kitco and in this interview today. So I challenge the mining sector to come to the table and let's create a new system.
So I found this chart really interesting, quite cool actually. So this is from Ronnie Stoffele and the Incrementum Group. And it's a real eye-opener, and it just shows the size of the everything bubble that's been inflated by central banks. That's just destroyed the the purchasing power of all this fiat currency. And to return to a gold standard and its historic metrics, and this is just a 40% gold coverage. The gold price would need to be revalued at around $30,000 US. And Jim Rickards talks about this in his book, The New Case for Gold, which I highly recommend if those of you haven't read it. Definitely do so. And so if we saw $30,000 gold, what would that mean for silver? Well, I've shared this chart on numerous occasions, and look, according to Luke, even silver will participate in gold's rise. Now, if we're looking, look, I don't even have $30,000 on this chart, but even if gold went to 20,000, Luke says the gold-silver ratio on a secular basis is getting higher and higher and higher. Look, 80. Even if we went 80, we're looking at $250 silver. So silver's going to participate in, in the revaluing of gold, which seems to be getting closer and closer and closer. And look, as we know, monetary history tells us that all fiat currencies collapse, and we always end up going back to a gold or a silver standard. Now, I want to finish off this video with a couple of charts. Now, I've shared this previously, and I've argued this for some time. In 2021, we didn't see gold and silver perform very well at all. In fact, it's been a year of buying, in my opinion. And that's because we've seen the Bank of America Global Fund Manager Survey talking about, do you think inflation is transitory or permanent? And if we go back to August and September, we can see that up to 70% of investors thought that inflation would be transitory. So inflation would be transitory. And on a permanent basis, between 26 and 32% thought it was permanent. However, have a look at the latest survey. And now we've got, even from February. So from permanent, so we went from 26 to 32 to February 39 to now 51% of investors think that inflation is permanent. And I argued this, that this is one of the reasons why institutional investors weren't moving into gold and silver. A lot of investors thought that inflation was transitory and that ultimately it was going to go down. Now look at transitory. 52%. 52% thought that it was transitory. Now, in March, it's 42%. So less investors are now believing the transitory line that central banks have been pushing for 12 months. And more are now saying, well, no, this is permanent. Now, yes, we know the term transitory simply means, i.e., not permanent. So ultimately, all inflation is transitory because it's never, i.e., permanent. But that's not what central banks have been arguing. And so I think we are now seeing a major shift. I think we're seeing a period of geopolitical instability. I think we're seeing, and so then people are going to move to safe haven assets. I think we're seeing, obviously, central bank buying, and we've seen that for some time, but even recently, it continues. We're seeing a de-dollarization emerging from a range of countries, from Russia, China, Saudis, the BRIC nations, India. I think the US and the West using sanctions and using the US dollar is ultimately going to backfire now. They've used it one too many times as a weapon. And I think that's going to be an issue. And then here, the whole inflation issue. I think now just about everyone is feeling the pain of inflation. They're waking up to it. Investors are waking up to it. And very soon we're going to get those institutional investors, the big money pouring into gold and silver, like what happened in the late 70s when the US dollar was in trouble then, and people around the world were losing confidence in the US dollar. We had President Carter issue Carter bonds, which were backed by the Swiss franc, which, trying to put confidence in the US dollar. And what did we see? That's when we saw the huge spike in both gold and silver. And so I think gold and silver investors have been waiting for a little while. I think things are about to start to turn in our favor. So what do I think is the better investment, gold or silver? Well, I think they're both fantastic. I own a lot of gold. I own a lot of silver. I've never sold my gold. I have sold my silver before. And I'll probably sell my silver again because I think silver on a percentage basis will probably run up a lot more than gold will. But that will be relative to other assets. So it all depends. So I think you should have gold and silver. I like them both, but yes, Luke does make a few good points and they shouldn't be dismissed. But I think silver is very good. And I think a lot of retail investors will move into silver because they won't be able to afford gold. And so we'll see silver being a much smaller market will probably spike a lot more than gold. But that's just my opinion. Once again, not financial advice. What do you guys think? Love to see your thoughts and opinions in the comments below. If you like this video, please hit that like button. Really do appreciate it. If you haven't yet subscribed to the channel, do so and hit that notification bell. Take care, everyone, and I'll see you all again on another episode of Finance Uncut.